Welcome to Sunshine Coast Blockchain and our introductory evening. We just want to give you a basic rundown of what cryptocurrencies are and follow the yellow brick road is what we've called the presentation, from home to the bank to the store and home again. All on the blockchain, of course. So the three basic tracks that we'll follow: trading in cryptocurrencies, in the crypto world, technology and investment. And if you want to stay late, you can enjoy the rest of the talk outside in the other room. Learning outcomes. I want you to leave here with a basic knowledge of cryptocurrencies. And I want you to learn how to buy Bitcoin using Australian dollars to get yourself into that world of the cryptocurrencies. Learn how to pay a bill using Bitcoin. That's important. Learn how to send Bitcoin from one wallet to another. Has to be a Bitcoin wallet to a Bitcoin wallet, and you'll understand more of that later on. And the first steps to buying Ethereum, or Ether as they call it, using Bitcoin on the Poloniex exchange. Might sound a bit far out to you all. If you don't know what Ethereum is, it's another cryptocurrency. You might be surprised to know there's about 800 cryptocurrencies out there now. So. And Ethereum and Bitcoin are just two of them. Bitcoin basics. What is Bitcoin? How does it work? Banking, buying, bill paying. Can we use Bitcoin for all of these things? The answer is yes, absolutely. Okay, disillusions, common ones that people have. Bitcoin is like the stock market or the Forex market. No, definitely not. They're entirely different. They're a decentralised player. They have very different organisational principles which allow small players to enter the market. Okay, they are very different in the fact that that key word is decentralisation. Okay, your foreign exchange market trades currencies from different countries: the Australian dollar, the Japanese yen. Okay, they're currencies that are owned by a government. All right. Cryptocurrencies are not owned by anyone. Okay, they're completely decentralised. They are actually, there's no board of directors to take your money. Okay, there's a common fear. There's someone who's going to rip me off, within the Bitcoin community. All right, there's no governing body in Bitcoin other than the community itself, and any changes that are going to be made simply can't happen without a majority vote, and these votes take ages and they're highly public, like the recent SegWit that occurred. SegWit turned into a hard fork, in fact. Okay, so Bitcoin Cash, which is a new version of Bitcoin, okay, just occurred.
That was a question. So with all the different types, and you said, how many providers? 800?
800 different cryptocurrencies and counting.
And totally decentralised, I get that. But where's the compliance around that? When you say, when you look at all these different players, and is there any compliance? Is there any regulation? Is there any sense of risk aversion that someone would be concerned about?
Well, the risk aversion comes from its decentralisation. So, and actually, that's something I will cover in the latter section. And yes, there is risk aversion. More risk aversion than with fiscal currencies and stock markets, stocks, etc. Investing in Bitcoin is risky. If you had a look at the 6 o'clock news, not investing in Bitcoin is risky. I think staying in the fiat currency world of Australian dollars and American dollars is more risky. Yeah. Okay, so move on. If I buy Bitcoin, I could be a victim of identity theft. And the answer to that is no. Bitcoin is Bitcoin, it's a currency. And your identity is something else altogether. So identity theft and Bitcoin, nothing to do with each other. Okay, like paper money and gold before it, Bitcoin allows entities to exchange value. Unlike its predecessors, Bitcoin is decentralized and it's digital. For the first time in history, we have a decentralized network which allows users to transact directly with each other, peer-to-peer. Using Bitcoin, people can exchange value incredibly quickly, especially now that we've had the SegWit, which was all about speeding up Bitcoin, and without intermediaries. Okay, so which translate to greater control of funds and lower fees. Okay, so you picture you got to send money from here to America or to Africa, right? You have to take your Australian dollars in your bank account or put them in your bank account and use the banks as an intermediary. Okay, so you've got at least a bank in Australia and a bank in America or wherever you're sending to. Okay, now each bank will hit you with their own fees. All right, so your bank will hit you with fees for the transaction. They'll hit you with fees. Well, they won't hit you with a fee. They actually just get you on the exchange rates, which are their own exchange rates, okay, at their own terms, because they control the gates, right? They're the gatekeepers of this particular transaction. The bank on the other end will charge you their fees, okay? So you send $1 million, you're probably going to end up with, what, I don't actually know, but $5,000, $10,000 haircut off that amount for the fees on that amount, okay? You can send Bitcoin, and it'll take, what, 3 days or more. Okay, you can send Bitcoin, $1 million worth of Bitcoin, straight to someone else's wallet in another country without any intermediaries apart from along the blockchain. It'll happen in minutes now, and the fees are $1 or $2. Okay, so it's faster. There's no fees, and
so I'm going to be one of those annoying people who ask questions all the time.
That's fine. I like questions.
So the question is, you have lower fees. So who governs the fees?
The miners govern the fees. Okay, so someone has to get paid, and there are on the blockchain what they call miners. Okay, and they're actually verifying all the transactions that occur on the blockchain 24 hours a day, and so you pay your fees to them.
It's a manual process of...
It's an automated process. Yep. I'll go into mining rigs a bit later.
Okay,
yeah. You're all right. Okay, where am I now? Yeah, exchange value quickly. Bitcoin can be sent to anyone, anywhere, without cross-border remittance fees, which is pretty much what I just enlarged on. Okay, what is Bitcoin? Bitcoin and other cryptocurrencies are electronic currencies. What makes them into currencies? Why is it a currency? All right, I read years ago there are 3 rules that make something has to pass in order to be a currency. First one is it has to be a medium of exchange. Okay, you have to be able to exchange Bitcoin for something else. Someone's got to want to take it off you for what they've got. Okay. Second, it has to be highly liquid. Okay, it has to be really liquid. Now, if you're wondering how liquid Bitcoin and other cryptocurrencies are, about a month ago when the price was $4,000 per Bitcoin, $4,000 a Bitcoin, now it's 4,200 odd. The market cap of cryptocurrencies altogether was $99 billion. And so it's gone up since then, I'd imagine. I haven't looked recently. But of the $99 billion, you have about, Bitcoin was about $44 billion of it, of the market cap. And then we have, excuse me, Ethereum, a close second, at about $36 billion of the market cap. And the rest of the cryptocurrencies were taking up the rest of it. So there's a fair bit of liquidity in the market. The third thing that makes something into a currency is the fact that it has to be a store of value, readily liquefiable, and a medium of exchange. So a store of value, that's $99 billion in the cryptocurrency market. Also points that out. It's the newest evolution of money. And here's a mouthful: a better expression of currency's conceptual ideal form, an arbitrarily agreed upon, decentrally evaluated unit of energy transfer. Okay, Bitcoin works better than traditional currencies. It's a big statement. All transactions in Bitcoin happen using a decentralized network accessed through the internet. Bitcoin is faster to transfer, has more robust financial security. It's resistant to devaluation. Now there's a statement that's very important. It's more solvent, vastly more open, and is incredibly transparent. Okay, so resistant to devaluation. All right. Your Australian dollar, say back when I was a boy, I remember petrol was 25 cents a litre, and my father complained when it went up to 27, 29 cents a litre, bitterly. Now you have a look at the price of petrol, up over $1 minimum. That's actually inflation of our currency. The definition of inflation is expanding the money supply. So if you have $1 million, Australian dollars in circulation, and you then print another $1 million the next day, you've effectively diluted the value of the first $1 million by half. Okay? So that's what inflation is. They don't tell you that on TV, but that's inflation. And that's what they've done to our currency. Right? And they're still doing it, and they're doing it at a faster and faster rate. Bitcoin, 21 million Bitcoin. That's the total amount that can ever exist. 16 million of them are currently in circulation. Miners get paid from the remaining unminted coins at 12.5 Bitcoin per block that they verify, which I'll cover later. But some of the miners get paid through the ones that are being issued. That's expected to run out at present rates at about 2040. Okay, so by 2040, all 21 million of the Bitcoin that could be minted will have been minted. No more can be minted. That's it. There's no government to print more. And in fact, people are losing their Bitcoin with regularity. You would have read stories, some of you, about, say, someone who put through their hard drive out and then remembered that 400 Bitcoin that they bought at 0.9 of a cent was on that hard drive. They're gone, out of existence. And so that's actually deflationary for this currency. Okay, so Bitcoin is a much more valuable proposition than your fiat currencies. Okay, some of the other statements. It's more solvent. Okay, so larger transactions. It's hard to amass that much Bitcoin that quickly at this present time with a market cap of 44 billion. I think the largest transaction that's taken place in Bitcoin is about 40 million. I'm not sure, but I think it was that Richard Branson who bought a plane. Yeah. Okay, so it's vastly more open and incredibly transparent. What does that mean? Transparent, decentralized network. Okay, so here we have, you or me, and I send you some money, some Bitcoin. Goes via this blockchain, right? What happens is I send a transaction. It gets bundled with a heap of other transactions into what's called a block of transactions. Used to be a 1 megabyte block, okay? And that was too small. It was slowing down the network because of the massive exponential growth in transactions that's been occurring in recent times, recent months, in fact. Okay, so that block goes out to the blockchain, okay, and it gets attached to it an extremely complicated mathematical equation, more or less. All right. Now, the mining rigs, what are miners? Okay, mining rigs are just bits of computer hardware with computer software loaded onto them. If you look on the internet, you or I or anyone could go out and buy mining rigs. Right? They're widely available. It's not worth mining Bitcoin anymore. There's too many of the big boys doing that with massive computing power. Okay, so these mining rigs are constantly verifying every transaction that occurs. So they do it in the form of blocks. Each block is assigned a block number in numerical order, and each mining rig gets this block with the equation attached to it. The first one to solve that equation gets paid 12.5 Bitcoin. What are they, 4,200 Australian at the moment? Good pay rate, okay? And then the rest of them then verify that the transactions on that block are correct, all right? Now, every mining rig throughout the world must keep a record of every transaction that's ever occurred in Bitcoin or any other cryptocurrency at this time. Okay, it's called proof of work. Every mining rig in the world must agree with every other mining rig in the world. If there's a discrepancy, say someone's trying to pull a fast one and say, we'll put these coins into my wallet, then they suddenly disagree with all the other mining rigs and they are pulled up on it and they're kind of removed from the network, or the transaction doesn't go through. Okay, so this is where every transaction is indelible. Okay, can't be rubbed out because every mining rig has a record of it. Now the concept's a little bit crazy at first, but when you think about it, if you're getting paid 12.5 Bitcoin to mine these things, you're going to do it. And if you have to have a large enough hard drive to keep a record of every transaction, you're going to do it. You'll buy the equipment to do it. Right? So these mining rigs are all over the world. There's tens of thousands of them, to my knowledge. Now, so these miners keep an indelible record of every transaction that occurs. Every transaction is honourable and honest because they can't be fudged, they can't be changed. No one can just say, oh yeah, no, let's do a, let's alter the ledger and remove that money from you, and remove those Bitcoin from your possession. Can't be done. Not without owning or taking control of more than 51% of the mining rigs. Okay, and it's about this stage someone says to me, oh yeah, and sorry, I'll go back, incredibly transparent. You are able to access the records of the blockchain. Okay, you can get on the internet, get on the blockchain and look up every transaction that's ever been. It's open ledger, it's public ledger. And someone says to me at this stage, so the NSA's got, ultimate computing power, or one of the big American, organisations that are keying up. Why don't they just, put huge amounts of money into into hacking, breaking the code, and take Bitcoin out? Well, go for it. It's all open source code. You can look that up too. There's nothing hidden. It's decentralised. It's not controlled by anyone. It's not able to be destroyed. Go after the mining rigs. There's a mining rig in this building. Go find it. Go after the miners. Destroy the mining rigs. They're like Hydra heads. They'll pop up all over the world. As soon as you start destroying them with 12.5 Bitcoin on offer, you betcha there'll be a lot more turn up. Okay. All right, so I've rabbited on with that. Transactions are indelibly verifiable and accountable and are visible to every participant, okay?
Sorry, I have two other questions.
Sure.
Firstly, you mentioned before about the guy who had a transaction that resided on his hard drive and he threw his hard drive out and therefore he'd lost the money. However, your other comment was that it's totally transparent that all transactions are available to people. So is there no fail-safe mechanism for the individual who lost his data on the hard drive to come back and go, here's the identity of the transaction, where is the value? Because where does the value sit? Does it sit in the individual users? Because I think that's a risk issue around that. So that's number one. And there was a second one, but I can't remember.
That's enough for now.
Yeah. Okay. But so, how does that work? So there's transparency, but
he's lost his.
Yeah, he lost his money.
Yeah, okay. So effectively, what you've done, if you've lost your Bitcoin on your hard drive, you've lost your private key. Okay, so your private key is the key to it. It's a cryptographically encoded key, and it verifies ownership of that currency, right? Without that key, well, the records on the blockchain of stuff going to a wallet is irrelevant. Okay, that cryptographic key is king. It's a 26 letters and numbers, uppercase, lowercase.
So you have to write that down on a piece of paper and.
Yeah, so I had a different.
Well, actually, yes.
Yes.
It is
like
good.
if you've got
It's stored on, when you create your wallet, it's stored on your wallet.
Right. Can the
You've
wallet
got to keep it to yourself.
Can you reside on multiple devices? Say, for instance, I may have that on the hard drive, but I can still have that key on my phone, for instance, if I wanted to retrieve those transactions. Is that possible?
Well,
Yes.
you'd be storing a record of it that could be hacked into. So what you normally do is you have it in your wallet. The wallet has a record of the cryptographic key. You also print out the cryptographic key of your wallet and put that away somewhere safe, right? So that if ever your computer dies or something.
People change computers, always happen.
Yep. You throw your computer out to the hard drive out to the dump.
So
You've got the cryptographic key. You can re-establish your wallet from that. Okay.
Right.
Can someone else?
Yes.
Yes.
Someone else can do the same.
Okay.
So
Well, it's like
they
you
can
can
find
find
what
what
you-
cash in your safe at home. Someone's tried to borrow mistakes.
yeah. And so with your questions, this is in fact a really good time to point out that when you're entered into this cryptocurrency world, you actually become your own bank. Okay, so you're leaving the banks behind. Now, if you went to a bank and they didn't have a security guard at the door and they didn't have a teller there verifying transactions to make sure that the money was going into the right place and was going into an actual bank account, right? And if they didn't have internet security when you were tapping away, chances are you'd say, this is not a good bank, I'm not going to use them. Now, you become your own bank when you walk into this world, okay? So your security is primary, okay? It's your responsibility. Now we can teach you a little bit of how to interact securely with this world, right? But it's up to you to actually do it. I'll teach you a little bit of that tonight, okay?
So what you're saying is when you decentralise, you end up becoming a lot more responsible for yourself.
That's
so
right.
And
the responsibility is all on us rather than another entity. We are
That's
the
right.
entity.
That's right. So you're releasing the shackles of control or middlemen who, control the gates, the gatekeepers,
So
and you're taking on responsibility. It's well worded.
with the ISA wallet, so you're saying you shouldn't really have it on your mobile phone and your computer? Or
No, I'm saying that the more places you keep a record of your cryptographic keys that are hackable, like your mobile phone's live all the time.
yeah.
And I don't know much about cybersecurity, but
Can be hacked.
they can be hacked, yeah. Your computer can be hacked. So I don't keep my cryptographic keys on my computer, and I use other security measures as well. I do keep paper wallets, which are basically a printout of my cryptographic keys, and apart from that, I'll go into a bit of the security side of things later.
Yeah, I'm interested with that. 'Cause
Yeah. Oh, yeah. Yeah, don't get creeped out by this. It's actually a really easy world to interact in. It's just you have to look after your own security. Okay. What is a Bitcoin wallet? Okay, so when you interact in this world, I break it down into 3 different types of providers, okay? You've got exchanges. They're the guys who you give your Australian dollars to and transport you into Bitcoin or Ethereum, excuse me. And then you've got wallets, right? Similar to the wallet in your pocket, okay? That's where you store your coins, whichever coins you've got. Welcome, guys. Now, the third entity that you can interact with are brokers was the first one. They broker you into the market. Exchanges are the third one, and they are trading platforms. Okay, they allow you to trade between cryptocurrencies in the hope of making money, which is in fact something that we sort of show a little bit of here too. Ivan has done some live trading nights, which are very interesting. Okay, a Bitcoin wallet is a place to store your funds. I don't really like that explanation too much because I break it down a bit more. It has it's the equivalent of a bank account, and it has an address. Okay, so you have your private wallet address that people send Bitcoin funds to you. It's actually a 16-character number and letter sort of 16-digit record. They allow you to receive the Bitcoin and store it. Okay, so I'll break down the wallets and just let you know that there's an infinite array of wallets. They're all different. They all offer different things, and it's amazing. I went into the office and said, right, I'm going to go and search for a Bitcoin wallet and Ethereum wallet to store our stuff. I'll be back in a couple of hours. 2 days later, I came out of the office. I was trembling and traumatised, and I couldn't believe it. I still hadn't found my answers because it just blew my mind, the variety that's out there, okay? So I settled on a blockchain wallet to store Bitcoin, and my Ether wallet is another one. And that will take Ethereum tokens and any other tokens that are minted on the Ethereum platform, okay?
There's a lot of talk about Ethereum, so I know that you talk about 800 different types of currencies, which from the consumer's point of view, or even the business owner, would be difficult to choose, as you just said, 2 days to decide, which means too much hard work, if you ask me. Because, given too many choices and where to choose, and how do I know if I'm making the right choice? If you look at the current, I'm just entered into this conversation, but you see Ethereum seems to be the market leader in this space. Do you see the convergence happening with these 800 people into, the big 5 or the big 10 or something like that? And will they have their own wallet? Is there 800 different wallets associated with every different sort of currency? I find that would be very frustrating.
Well, it can be, but I've just given you 2 good ones. They're quite secure. You hold the cryptographic keys in your hand. I should go into a bit of history, actually. 2008, right in the midst of the financial crisis, a white paper was released. It's a 9-page document. I've got it here somewhere. But a white paper was released by someone called, and I will answer your question through this, my ramblings. by an entity named Satoshi Nakamoto. Okay, so a lot of very intelligent people read that paper and went, "This is the answer. This is what we've been looking for." And by 2009, Bitcoin was launched as a decentralized currency. So this was born quite cleverly right in the midst and despair of the 2008 crash. Now, since 2009, Bitcoin's took about 5 years to make progress and become a bit more mainstream. And then in 2014, another currency which has rocked the world called Ethereum was launched. Now, Ethereum, aside from being a coin, or actually a token now, we're not allowed to call them coins anymore, they're actually tokens. Ethereum, aside from being a token, is actually a highly complex integrated computer software package, right? So these coins are actually able to be programmed with what's called smart contracts. Okay, so to give a really amateurish example, because I'm not a computer programmer, so I'll just give you how I understand it to be. A smart contract might be something like you go to buy a house and you can program Ethereum coins to the value of the house that you're going to buy to sit there in your account and wait for certain parameters to be satisfied. Okay, these parameters might be that the searches are done by a solicitor and the solicitor digitally signs that the searches are correct. They might then be, the final step would be that the ownership of the house, the title deed, is transferred into your name, the Department of Land's digitally signed, and then the Ethereum will automatically transfer itself into the account of the person you're buying the house off. Okay, and that can't be reversed. Okay, once the digital signing occurs, so like if each step is fulfilled, no one can stop that Ethereum from transferring from account to account as per the contract. So basically, to answer your question in a nutshell, just have a look at the market caps. If you're really confused, there's $44 billion out of 99 is in Bitcoin. There's 36 billion out of 99 is in Ethereum, and they're growing. So they're the big two, right, to hold on to. If you're looking for growth opportunities, then you have to do a bit of work. You have to actually search for some currencies that have a real world purpose, have a good development team, and have good advertising so that they're going to go up in value, okay? And hanging around crypto groups like this one is quite a good way to pick up on that sort of stuff as well. Just a hint for you.
Just one other question on that, because one of the things I read was the delay in actually transferring funds with these miners you were talking about. In the original Bitcoin framework, it took a long time to process a transaction, correct? And apparently Ethereum is actually now shortening that. Is that one of the deciding factors of what currency you choose? Because if there's 800 different providers, you'd want to go with someone where would facilitate the transaction in a timely manner, should we say?
It
and
depends.
is Ethereum the one that's, because of their infrastructure, that would allow that to happen?
It depends on what you're actually investing in the coin for. If you're investing in it for purpose of fast multiple transactions, then you're going to go for something like Litecoin, right? Which was designed for exactly that, right, on the Lightning Network, which is supposed to be the Bitcoin's replacement because it's faster and just as good. If you're looking for the gold, something a store of value forevermore, Bitcoin, right? So, and it's going up in value. If you're looking for something with the potential to mint coins on and to write smart contracts on, and to do various other things on, then the Ethereum platform, Ethereum. If you're looking for capital gains, then you're looking for some of the tokens minted on the Ethereum platform that have come about. Basically, look, if you're looking to transfer between currencies, it's excruciatingly easy and fairly well instant. You get onto an exchange, which I'm on about 4 of them for different currencies, and you just buy one and sell one to buy the other, and it's pretty well instant. If you're looking to transfer money, it can take, with Ethereum, it could take up to 24 hours, but it's not so when the network's congested, or it could take minutes. Okay. With Bitcoin, now that it's sped up, I haven't sent a transaction since the 1st of this month, but I understand it'll be minutes.
Quick now.
Yep, they're very quick now. Okay, so wallets, where you store your money, different sorts of wallets. There's wallets online, okay, where you don't hold your cryptographic keys. I don't recommend those ones because if anything goes wrong, you've got no record of ownership and no leg to stand on, okay? So if the wallet owner walks, then your money walks with it, with him. There are wallets where you hold the cryptographic keys. There's ones where you load them onto your computer and it sits on your computer. There's ones where you just log in, okay? My Ether wallet and blockchain wallet are ones like that where you just log into them. And there's also hard wallets where you actually unplug them from the network and they're quite secure little devices. I've got one there in the back of the room, which I'll probably pull it out. Anyone wants to, they can have a look at it later, but it's a encrypted device with high security measures. If anyone tries to break into it and they don't have your little personal code to get in that you have to enter, it'll actually burn its own contents. It'll destroy its own contents and you have to go back to your cryptographic keys to reconstruct that wallet. Okay, so highly secure devices. So that is probably the most secure, but if someone steals your wallet, you can still recover your funds. Okay, yeah. So lots of different different devices for storing your money. All right. So say you want to get into this world. You walk out of here tonight and you go, oh crikey, where do I start? Okay, go home, sign up to CoinJar. This is one option of many. Okay, CoinJar is a company that works just fine. I've used them myself. That is their web address, and complete their identity verification process takes about 3 days. It's a pain in the backside. They only interact in Bitcoin, and then once you're verified, you can deposit Australian dollars into your CoinJar account. You can do that either by BPay or Polypay. For anyone who hasn't used Polypay, and I'd never had before I got into this world, Polypay just rips it straight out of your bank account. But you've got to actually approve the transaction using your username and password, logging into your bank account. Okay, and it's the quickest way. Happens within minutes, in my experience.
Can you do it in big amounts?
No, they limit your amounts, yeah, to avoid the anti-money laundering laws from triggering monitoring of your transactions. Yeah, so I think, what is it, a daily limit of about, they start off with $1,000 and then without even telling you, they up it to about $2,000 or $3,000 over time once you get a few transactions under your belt. The interesting thing about CoinJar is you pay about $18 and they'll send you in the mail a CoinJar swipe card. Right? I normally got it on me, but I've forgotten my wallet tonight. It's just an FPOS card, so you can use it in any FPOS machine, spend your Bitcoin, right? So they'll...
950,000 FPOS machines, by the way.
There you go, he's on. And also you can use it on any ReadyBank ATMs, so $2.50 transaction fee or something like that. But yeah, it's interesting, you can spend your Bitcoin that way. They convert your Bitcoin back to Australian dollars and then you spend the Australian dollars.
But there's a transaction processing fee of $2.50 though, right?
That's,
who takes that out?
No, that's only at an ATM.
Okay.
On the FPOS machines it's free.
I see.
Yep, but they'll get you on their exchange rates back from Bitcoin. So they make money, don't worry about that. Are there other coin agencies? Yes. Okay, CoinSpot. Welcome to CoinSpot. They work. I've never lost money through them. They're cheaper than CoinJar. Their transaction costs, their actual, but they've got no customer service. You write them an email and say, why has my Ether not arrived into my wallet yet? I sent it 7 days. I think that's been enough. I've checked the transaction 3 times. I did everything right. And then you get no response. A couple of days later, it arrives in your account and you say, oh, well, I'm not telling them. I'll see how long it takes for them to get back to me. And they send you a letter says, we're referring it to our dev team, stand by, and you never hear back from them. But I've never lost money with them. I've done plenty of transactions and they are cheaper, okay? Now this is the bad part about the crypto world. When you're getting into the crypto world, they're going to take a slice of blood from you, a pint of blood, right? So the transaction charges, off the top of my head, I think they range from about 4 to 8% of the transaction to get into Bitcoin, okay? So it's a very young market, Okay, there's not enough competition out there yet to reduce those charges, and these guys are taking their bounty in blood, right? But these guys are the CoinSpot are one of the cheaper ones, all right? And they have about 32 different cryptocurrencies that you can buy into, so you can buy directly from Australian dollars into a heap of them, which you'll see soon. Yes?
Is that just the first time that you load your account with some AUD that they would take that percentage, or is it every transaction?
Every transaction from AUD to a cryptocurrency or from one cryptocurrency to another. The general trend with these guys, with the brokers, is to get your money into their accounts, exchange it for cryptocurrencies, and then get your cryptocurrencies off their exchange. Because once again, they're a place where you don't hold the cryptographic keys. Okay, so you get your money to somewhere secure.
Your private keys.
They hold your private keys, that's
Really?
right. They're minding them for you.
Compliance.
It's not really your wallet.
Yeah, that's exactly right. Yep.
Is there any regulation as to who opens and starts these brokerages? Like, if you're dealing in real Australian dollars, the Australian government determines who can be a broker, who can't. But here, I see that one there, living room of Satoshi. I can be livingroomofIan.com, and you guys can be giving me dollars, and I can be giving you. Is there any regulations?
Oh, there's really stringent precursors that you have to satisfy. You have to be able to program.
I can find one of those.
Yeah, and broker deals with
I can find one.
Okay, so living room with Satoshi, that's an interesting one. They're a company, they're a Brisbane startup. They've got an Eagle Street, I think, Eagle Street, Brisbane address listed, a couple of guys. And they basically have set up a company where they'll pay BPay for you. So you've got a bill to pay, they will accept your Bitcoin, convert it to Australian dollars, and they'll pay the bill for you. It doesn't give any record of who's paid the bill. So the question is, can you pay a bill for someone else if you so choose? Yes, you can. Definitely you can pay a bill for someone else. Do they ever monitor who pays BPays and such? Okay, so it's in effect an interesting way to not have a record of your an auditing trail of your monies going into. Not that I advise anyone against paying their taxation. Taxation law at this time is interesting. It's treated as an investment asset. Forgive me, my wording might not quite be right, but the flavour of what I say is correct. So you invest in Bitcoin, you're taking it out of Australian dollars, you've invested in something, and it's when you bring your money back into Australian dollars that you are now dealing in the realm of the ATO. And should you make any capital gains during the time from your ownership of cryptocurrencies, then you'll pay tax on the profit. If you've retained those cryptocurrencies for more than 1 year, you will pay tax on 1/2 of the profit. Okay. Now the interesting thing, however, is that at this present time there's a nice little situation in the law where if you make a purchase in cryptocurrency to the value of less than $10,000, it's tax exempt. So there's a nice little tidbit for you. Okay. Now we don't expect that law will stick around forever. There's CoinSpot's homepage. Very pretty little rocket heading for the moon. I'm not sure what that's about, but there it is. Living room of Satoshi. The interesting thing is if you go here to the stats, they've tried to keep it sort of open and transparent. So they've got a little listing there that gives a nice pie chart of where the money's going, what people are paying their bills. And the ATO features usually about 6th on the list. So people using Bitcoin to pay the ATO debts. Poloniex.com. Okay, best of a bad bunch is my assessment. Okay, having traded stocks and done a little bit on the foreign exchange market and SPY as well, I can say that their charting package is second rate, and some of the things that occur on their platform aren't exactly sterling. However, they are probably the best of a bad bunch. So they've got the highest market, the highest volume of cash going through them, currency going through them. Using Poloniex, you profit by trading between cryptocurrencies And the tendency is to think about the value in Australian dollars, right? But the truth is what you're looking to do is transfer between one coin which you think is either going down in value or not going up as fast as another coin, and so you want to transfer from this coin into the one that's going up, and then when you transfer back into this coin here, you've got more of that coin than you had when you sold out of it, right? So the idea is to up the number of coins you've got. Now, having traded a lot of other devices like stocks, etc., and not being that good at it really, it's actually very easy to make money on this in this particular world because it's less controlled and less contrived than it's an absolute new market, right?
It's not as manipulated.
Sorry?
Not as manipulated.
Yeah, it's not as manipulated. It's like the Wild West all over again.
Not as regulated, though.
Yeah, it's not regulated.
When you're trading between currencies, you just got to pay that 8%, that blood money?
No. Poloniex charges between 0.25 and 0.5%, and I think they get you on in little other ways too. So they've got their charges, but it's nothing like when you get into this world.
Yeah.
Now the beauty, you pay your blood money to get into the cryptocurrencies world, but the beauty of it is, like I've said about Bitcoin, it's always going up in value. Right? It's deflation. It's a deflationary currency by nature, right? And the beautiful part about getting in right now is that you are in fact early adopters should you choose to jump into this world, because I don't know how many percent of the population are in at the moment, but I would say it's less than 1%.
It's
Okay.
very small.
Very, very small. Now that makes you early adopters. Imagine,
I think it's 0.001%.
it's possible, yeah. Now
By adding,
imagine this, right? Bitcoin's $4,200 per Bitcoin. It started off less than a cent. That's ridiculous. It's huge money if you'd invested early. And you've really missed the boat, haven't you? What if Bitcoin took 10% of the foreign exchange market? Each Bitcoin would be worth $1 million calculated, and that's not accounting for Bitcoin that goes missing. What if it only took 1% of the Forex market? Still worth it from $4,000 to $100,000? So you're the early adopters, okay?
Do you think it's going to significantly appreciate like that?
Yes,
Yes,
beyond a
for
doubt.
sure.
There's people singing it from the rooftops, like my wife and I, and everyone else in this group outside there. You were all invited by someone. How often do you get into a room and there's that many outside and this many new people come in to have a look? So it's starting to exponentially spread the word.
And do you think that's true of Bitcoin and Ethereum and also the others like Litecoin and so on?
Do I think that?
Do you think that's equally optimistic in regard to the others?
I think the others follow the value of Bitcoin up. Bitcoin's the gold of this world because it only has 21 million coins. It was the original. It's solid. It's been tested. It's been attacked. They've tried. They're looking for someone to blame for this, right? So I think I read an article the other day where there's some guy who claimed that he was Satoshi Nakamoto, right, the creator of Bitcoin. He got his house raided almost immediately. They tried to put him in jail for it. So, yeah. Yeah, I'm not sure who it was, to be honest, but it wasn't worth his while, and it turns out he wasn't telling the truth. Anyway, okay, so Poloniex. All trading comes with risk. Not telling you to trade, just saying that a lot of us here do it. This is a picture of a Poloniex page. Okay, you'll see lots of detail there. It's a bit confusing, but Bitcoin, BTC, that's the abbreviation for it. Bitcoin, USDT, US dollar tethered. So it's not the US dollar, it's another coin, okay? It's another cryptocurrency that's actually tethered to the US dollar. So it holds the value of the US dollar plus or minus 8%, right? That's its main claim to fame. So it's sort of like a way of stabilising your life in the cryptocurrency world, okay? Because cryptocurrency, being fledgling currencies, are prone to have what they call crashes, right? They're not really crashes. Well, they are, but they're not. If you don't sell, then you don't lose out. Okay, price of Bitcoin went up to $100, crashed back to $10. Tenfold loss if you sold. Went back up to $400, crashed back to $40, tenfold loss if you sold. Recently went up to $4,000, crashed back to $2,500. What's happening? The crashes aren't so big. It's not even a 50% loss if you sold. Right, it's back up to $4,200 now. The market cap, there's that much money in the market now that the crashes aren't so dramatic. So you're coming at a time where it's not so white knuckle time. Okay? All right, so this is a chart of Bitcoin versus the US dollar, because Bitcoin is the currency that's listed first. If the chart goes up, then the value of Bitcoin is going up, right? So this is an exchange where you can exchange between those two coins. These little bars here, okay, you've got green and red ones. These are called, just in case you haven't heard of them before, they're called candlesticks, okay? You've got a solid section of coloured red or green, and then you've got what they call the wick coming out the top and bottom, right? A little black line out the top and bottom, okay? That little picture holds 4 pieces of information. Open, high, low, close prices for the day, or for that period of time. What is this? This is a 30-minute, they're 30-minute candlesticks. So each candlestick represents 30 minutes of price movement, and it shows the open price, the high and low price, right? That's the wicks, the black line to the top and bottom, right? And in between the open and close price. If the open price starts out low and goes up to a closing price that's higher, it's a green candlestick. If the open price starts out high and sinks down, it moves all over the place. So it opens there, the price moves all over the place through that 30 minutes, closes there, opens high, closes low, that's a red candlestick. So it's a really simple diagrammatic representation of what the price is doing, and when you link all the candlesticks together, you start to get a pattern. Underneath, you see there's volume bars here, those grey kind of bars there, right? And then you can start to analyse what the heck's going on. Dramatic price drop here. Whoa, look out, okay? Here, there's a spike in volume, okay, that drove the price up. So that's a very large spike in volume. We're probably talking 200, 300, 400 Bitcoin, right, at a guess. So times that by $4,000 and you get the magic number, okay? Drove the price up. Then those guys who are pushing the price up there, so they're buying low, push the price up, and they start selling about up here, coming up towards the top, right? Right, and then it comes to a point where they say, okay, price isn't going any further, and they start selling dramatically. Price starts to drop and they drive it down even further, and it starts to crash, okay? The volume is fairly low. Sellers are jumping over the top of each other to get the heck out of this trade, right? This big grey bar here goes right up through, over the top of that red candle, the last red candle of that succession of 4, and actually comes out the top of that. It's a massive bar. That's massive buying power. We're talking a whale. So whales are people with huge amounts of money. Okay, so this whale has probably, undoubtedly the same person, has driven the price down quite quickly, and then he's said, "Thou shalt not pass." Okay, you've got a massive tail there on this last red bar. I don't know if you can see it, but the tail of it, the wick, comes down to there, and you can see that the red bar ends up here. So what's happened is the price has dropped very quickly and it's going through the floor. And the whale comes in and puts up a buy wall. In other words, he'll say, okay, 500 Bitcoin buy at this price. And the sellers come down to that price, they're jumping over the top of each other and like peas at a window, they fling themselves at this wall, right? The buy wall, and you'll see the Bitcoin for sale go down from 500 to 400 Bitcoin to 300 Bitcoin, bang, 500 Bitcoin again. So he's buying huge amounts of Bitcoin at a low, very low price. And he keeps on buying and buying and buying until people get the idea, oh, okay, it's not going down anymore. And so he's bought there, and guess where he's selling? Back up here and back up here, okay? So you start to read chart patterns, you start to pick up on what's going on when you start to get into a little bit of bar analysis, etc. You see down here, buy Bitcoin, or sell Bitcoin, whatever you want to do, you put in your buy or sell order. It's very quick and easy to do. Okay, so that's Poloniex. Alrighty, transfer, step-by-step overview for basic cryptocurrency trading. Transfer Bitcoin from CoinJar to Poloniex. This is a wallet-to-wallet transfer. And you know what? I'm going to go on another side shoot. This is a bit of security for you, okay? It comes from Ben. He's a resident trader here. He's talking outside at the moment, actually. And he came to us with this rule of threes. All right, so every transaction that you perform, check it 3 times, okay? So if you send from one wallet to another wallet, you first got to have the address of that wallet that you're sending to, right? The 16-character address of that wallet. So, say I'm sending from, CoinJar to Poloniex. I'll open up Poloniex and CoinJar. I need to get the address of Poloniex, right, of the Bitcoin wallet in Poloniex. So I open up Poloniex, get the address, copy and paste it into CoinJar, right? Say, okay, I want to send 1 Bitcoin. She's ready to go, but before I send it, 3 times I'll check the address. First thing I check is that I'm sending from a Bitcoin wallet to a Bitcoin wallet, okay? So and I say this out loud every time. I sound stupid and I get bored, but I do it anyway. I say I'm sending from CoinJar, Bitcoin wallet, to Poloniex, Bitcoin wallet, and I visually check. I click between the screens, I visually check that it's Bitcoin to Bitcoin. Because if you send Bitcoin to an Ethereum wallet, guess what? She ain't coming back, ever. Okay, 3 times. Bitcoin to a Bitcoin wallet, visually check it, okay? Then, next thing is the address. You want to make sure you've got the right address. First 3 digits, last 3 digits, say 3 capital X, Y, 2 AC, 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 3 times, okay? I start to get bored, start to challenge myself to remember 5 or 6 at the front and back, okay? Right, so that, if you're copying and pasting the address, the most likely place that you're going to lose some of the numbers and letters from is the beginning or the end of it. You might miss a bit, okay? So you check those first 3 and last 3, and you do it 3 times, right? You really want to be sure about this. You're sending your value, your life's labour through, okay? Now the last thing is, right, transfers, confirm, bang, hit OK to send. You will either get an email to your email account or something comes up on the screen, right, to tell you what the transaction that's going through. So you then go through that check again. You go, okay, wallet address is da 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 da. Because if someone is mirroring your account and they're sending the funds, say you've got a hacker on your computer, they're mirroring your account, sending it off to another address, and it just looks like you're sending it to that address, this is where you're going to pick it up, right? And the email or that on screen. Check the address again. Check it's Bitcoin to Bitcoin, wallet to wallet, right? Check all those 3 times again, and then if you're happy, send it, right? Yes?
What if you weren't happy?
Don't send it.
Okay. So
If you think
at
you're
which
being...
point if you come across something that, because you just said somebody could mirror, someone could be hacking, so at which point at any of those stages?
Well, if at any stage, if you get an idea that something's wrong and someone's attempting to steal your funds, mate, I would have that computer turned off and I'd have it to a computer technician faster than fast. I wouldn't take any risks with it. It's really not worth it. Okay, so at what stage? At the stage where you really do honestly suspect that something's up. If you've got $5 in your wallet and you're sending that, big deal. The other thing is, if you're sending your value to a new address, all right, the first time you do it, you just send something like a few bucks, a couple of bucks, right? Don't send your $10,000. Okay? You want to make sure it gets there first. So send a test transaction first. If it gets there, send the rest. Okay? So there's a couple of bits of security, yeah?
Just on that, there's no authentication on either side. So like if you look at a BSB in a bank account these days, if I set it to the right BSB but the wrong bank account, then that account wouldn't exist. Then the transaction would be sent back to me. So that's not the case.
Right.
There's no authentication, two-way authentication in terms of account to account. Like you could, the number you gave me, I could have got wrong, and does it confirm
Yeah, like
who
where
the
does it
holder is? And, is there,
It's my belief that the funds are lost. You send it to the wrong wallet address.
And you can't retrieve them even through the miners who are
No.
actually processing transactions and approving them?
Where does it go?
Well, it either goes into a real wallet address, and if it's not the one you intended, then they're the proud owner of the new Bitcoin, or it goes into non-existence because your keys are now no longer existent on their system. Your cryptographic key no longer holds any value to it, right? And it's been that value has been assigned a new cryptographic key to a location that doesn't exist and a person who doesn't hold it. So it effectively ceases to exist, okay? So like I said, you are your own bank. But the good news is it's highly deflationary for the currency, yeah? But don't be afraid, okay? It's easy to get like a bit shaky about this. The truth is, I've conducted dozens of transactions. I've never lost a cent. Ben's transacted hundreds, if not 1,000 times. Never lost a cent. Follow the rules. Simple stuff. I'll go into a bit of internet security in a little while too. Okay, so there's some really, really handy little things you can get into. Okay, so transfer from Bitcoin to Poloniex. Do your rule of threes. That's your becoming your own bank, taking responsibility. Convert your Bitcoin into Ethereum on Poloniex. Okay, so you saw there the trade, how I was describing on the Poloniex platform how you could trade, right? It's the same mechanism. If you just want to convert between currencies, okay, you just sell the one that you've got, or buy the one that you want, okay. So convert Ethereum into Bitcoin using a sell order, and then trading this currency pair, right? So they're saying go from Bitcoin to Ethereum, and then Ethereum back to Bitcoin. Hopefully you've got a few more coins, or a bit more, 0.1 of a coin more by the time you come out of it. And then trading this currency pair allows you to increase your holdings, okay? If you've read the charts the right way. Are there other cryptocurrency exchanges other than Poloniex? There's a few of them. There's more and more every day. They're of varying quality. I'm on about 4 of them. And Poloniex is probably the best user experience of the lot of them that I'm on so far.
How many are Australian?
Good question. I honestly don't know the answer. You'd have to go and investigate every one of them and just see where their address is. Most of them don't even publish an address. This is the curious thing. Like I said, it's like the Wild West. I don't get into anything without first getting on Google. Say I find a new exchange I want to get into, get on Google, say, is this exchange a scam? And I read all the posts on it, and you'll be surprised what you find on some of them, okay? Then, where possible, if I can find someone else who's using the exchange, I'll get their advice, yeah? Like there's a credit card provider called Zapo, right? Zapo Wallet, they'll give you a Visa debit card. Right, so you can spend your Bitcoin or whatever cryptocurrency you've got that way. I got on, typed in, is this a scam? And people who were using it and putting just, very couple of dollars worth of value in there had huge amounts of trouble, so I just stayed right away from it. Then I spoke to other people in the group. They've been using Zapo card for years, yeah? So apparently it's okay, but if you're using small amounts, don't bother. Yeah? You want to have at least $100 worth of transaction. I still haven't got a Zapo card. Okay, two-factor authentication. This is where I do need to grab my little case. Two-factor authentication. It's a security measure. Helps you to keep what's yours. There's that hard wallet I was talking about. That is a Ledger Nano S. Whoop, and I've nearly just lost it. Okay, you can pass that around if you like. Have a look at it. I'd like it back at the end. Okay. Here's
they're about $300, aren't they, to buy?
No. 2 of them from France cost me $230 with extra cables. But they're very hard to get a hold of because of the becoming like hen's teeth. People want them and there's not enough in production to keep up with demand. So there's a few months waiting list now. This is just a bit of a novelty. These are like science fiction cred sticks, you know, credit sticks. You can load your Bitcoin on there, and the Bitcoin is secure and can be verified. You can look on it and have a look how much Bitcoin's on there, right? So it's like a pass it around. Here you go. Here's $50, or well, yeah, it's never stable. Here's, you know, 0.1 of a Bitcoin, $300, $400 now. The cryptographic key to that is on it, but it's not accessible. You can't read it until you actually get a sharp object, like a pen or whatever, and you poke. There's a white ring there. You actually poke a hole in it, and you break a bit of the electronic hardware, and it permanently alters the nature of the device. You can no longer deposit on it, but you can read the cryptographic key and withdraw from it. So that's just a little, like just a handy pass around, you know, store of value for your Bitcoin. Just more of a novelty than anything that's useful. 2FA, an extra layer of security for your CoinJar or Poloniex account, better than just a username and password. Okay, so two-factor authentication, there's a few different versions. There's the old username, password, and then you receive a text message on your phone, enter the code from your phone into the computer, and then you're in. Or get an email with a code, or, you know, hit the link. Right, they're the kind of older ways to do it. Oh, hello, my phone's trying to tell me something. I've hit buttons again. Right. Okay, the latest and greatest is Google Authenticator. Just get this phone open for you. Right, a Google Authenticator is a Google program, and they give you a TOT password, TOTP password, timed one-time password. Okay, so Google Authenticator, I've just turned the phone off. Great. Google Authenticator, right, is able to be used without the phone interacting with the outside world. This is a burn phone. It's never had a SIM card in it, and the internet on it has only been used at McDonald's. Okay, so we took it to McDonald's and then turned off all interaction with the outside world, loaded Google Authenticator on it, and then when we wanted to use two-factor authentication, say on Poloniex, that bottom one there's my Poloniex account number. Right, don't steal my phone. Right, so we just show the code, the QR code, right, on Poloniex to my phone. My phone goes dum dum, captures it, and that's a cryptographic key. That is a timed key, right? So every 20 seconds, you'll notice a blue circle to the right-hand side. Every 20 seconds, as the circle disappears, that password changes, right? 6-digit number. And this phone is purchased without a name. Okay, so it's not my phone. So there is no tie for me and this phone to Poloniex or any other of my exchanges, right? There's just these randomly generated numbers, and Poloniex has the same random generator, and it's a very good security device, okay? Yep.
I actually had to uninstall Google Authenticator, and I lost contact. I lost contact with the actual app. It was actually Coinbase. So you know how you take and that's been a major problem because I've been locked out since.
Okay, I've had the same experience. I had it with CoinJar, and I had to go through all these security questions. I think the phone was the timer on the phone, internal timer on the phone was a bit out, and so yeah, this is a nice new one. I went through security questions and they unlocked it for me, and then I was able to install it using this. Have you been in contact with Coinbase?
Yeah, their community, their customer support's probably worse than CoinJar.
Awesome. Okay.
Actually, you go around in circles and there is no one to contact because they're all busy dealing with other things.
Yep. Now that's the thing. Remain polite. Keep contacting them. Okay. Keep emailing them. Gentle reminders. Say, I know that you guys are really busy, because what's happened in this world, they are really busy. This cryptocurrency market has just gone bonanza, exponential, huge amounts of people coming into it, and they just don't have the manpower to deal with every query. So you've just got to keep on gently reminding them. And they do play favourites. You're talking about people who can program. They're not necessarily good with people skills, so they will ignore you if you're being abusive. Okay, so there's a bit of personal advice. I'm just super sweet and super nice to everyone when it comes to this world, because they do hold a little bit of power over you. Okay, in the fact that they can delay your transactions. But Coinbase, I haven't heard many good things about, but just keep gently reminding and following up. Also, speak to some of the people outside here, because they've got a lot of experience. People like Ben, Ivan, they're really worth speaking to. And I had similar things going on, and speaking to them gave me a great degree of calmness in my heart. Okay, because they've got experience with a lot of this stuff. Okay, that's 2FA. You need two-factor authentication if you're concerned about the security of your funds held on CoinJar or Poloniex or any other exchange, okay? It's not highly recommended, it's crucial. You are your own bank in this world. Are there any other tools for trading? There's TabTrader, and have a look at the price live on my exchange. I can trade on my exchanges, any of them that I like, using this program, and I've told the programs that funds are not allowed to be withdrawn from the exchanges using this program. The API keys that are used to connect the exchange to TabTrader are apparently more secure than you logging on with your computer. Okay, and that comes from Ivan, whose business is cybersecurity. Yep.
Just a thing about Apple doesn't support TabTrader.
That's true, yes, that's very important actually. There's some kind of a communication problem. Apple verifies every app that goes onto their phone. They're very thorough about it, so at this particular point in time, TabTrader is not available on Apple, but it is available on Android, so Android smartphones.
It's available, but you can't trade on it.
It's available, but you can't trade on it, yeah.
So you just get exchange rates.
Okay. So you can also tap on any particular stock, and up comes the chart. Right. So I only just recently bought a smartphone. It's way smarter than me. So you can manipulate the charts, draw chart patterns on there, and put alerts, do a lot of things. So TabTrader is quite handy, especially if you're out and about and you really do want to keep an eye on the prices that you're going to experience with cryptocurrencies.
Is that still your same phone that you were talking about before, or is that the other phone?
That's the drug dealing phone.
Yeah, that's the drug dealing phone. That's the trading phone, yeah.
Where's your money when you're on this TabTrader? Is it in the TabTrader?
No.
It's in your exchanges?
It remains on the exchange, and the API key, which there's another little screen on that.
How do they make their money?
How do they make their money? Good question. I don't know, actually, but they will. Okay, so mobile tools for trading. Blockfolio is another one. That's the one I haven't actually used. I have no experience with it, and I'm not going to. Oh, sorry, anyone writing that down?
Are you going to circulate this presentation to the group?
If you are a member of the Sunshine Coast blockchain, then this presentation is available to you on there with all of the links and the links to Ivan's white paper and Ivan's new coin that he's releasing. What is an API key and what does it do? Okay, I have to read this every time because I forget what it stands for. It's an application programming interface key. It's a unique code used to connect your mobile programs like TabTrader to websites like Poloniex. Poloniex generates the API key, and for you to paste into TabTrader. Now, API key replaces your username, password, and two-factor authentication, and it is more secure than those. They're long-length encrypted keys, near impossible to fake, spoof, or recreate unless you tell someone your key. Don't do that. Oh, something I forgot. Back before when I was talking about two-factor authentication, Google Authenticator, okay, when you go to scan onto Google Authenticator the QR code from your, say, Poloniex or your wallets, whatever, right, you can actually print out those QR codes and the key, right? So I've got a printout of all the keys for my accounts so that if my phone breaks I can actually reload Google Authenticator onto my phone. Okay, so that's a recommendation. Print out the QR codes when you set up two-factor authentication.
Just explain, because I'm brand new with all this Bitcoin, and what's just happened on the first, like, is it a split of Bitcoin, or is it with the Bitcoin Cash? I just don't...
It's a magic question, yeah.
I just don't understand.
Okay, so in a nutshell, it was meant to be just a SegWit, right? A segregated witness, which is where they, these 1 megabyte blocks that the transactions were bundled into and sent off were too small, okay? And when you, in each transaction there were 3 bits of information, and the main body of the information they decided, we'll just take that out and we'll just have the from address, the amount and the to address, and we'll put all this other information down in a separate block. Okay, so that's the segregated witness part of it, right? Now, that would effectively speed it up by at least double, if not quadruple, possibly, right? Now, they had to get a 95% consensus vote for that from the miners, right? They got that vote, so SegWit went through. However, to add to that, right, another group, a separatist group of miners decided, okay, we're doing our own thing. We're going to create a new coin called Bitcoin Cash by going off, and we're going to actually increase the block size from 1 megabyte to 8 megabyte, which is be super fast, and we're going to take also the segregated witness as well. So it's going to be super fast forever, right? Excuse me, I think something, I'm not sure, I think it's something like 10% or 5% of the miners did this, right? So what happens is, each of these miners, no matter which way they went, they all have a full record of every transaction that occurred on the blockchain from the very first one through to the very last one that occurred through time, right? Through all of history. And this is a way, by the way, it's the first time we've been able to crowdsource history, okay? It's the only time in history that everyone's been able to participate in making history, right? And you think it's just transactions. There's a lot more happening in this world than that, thanks to the Ethereum platform. Anyway, that's just to the side. So straight through what you're asking. So what's happened is, effectively now, we've got miners that have created a new coin called Bitcoin Cash, right, which is even faster again, and the old coin, Bitcoin, with the segregated witness, which is faster than it was. And both sets of blockchains contain all the transactions that have ever occurred, so that means that anyone that's holding Bitcoin should now hold Bitcoin Cash and Bitcoin, right? Equal amounts of each. Okay, so some providers, some wallets took sides, and they didn't provide people with Bitcoin Cash. They said, right, let's crucify these naysaying evildoers who want to go their own way. Other wallets and other exchanges have supported them from the get-go, and wallets like Poloniex didn't support them to begin with. They sat on the fence, waited to see what's happened, and they've sent a letter out recently saying, you'll get your Bitcoin Cash soon because it looks like it's going to survive, you know? Okay, so that's in a nutshell what's happened. Does that answer that clear for you?
So if you buy
It's just
Bitcoin Cash, what happens if you buy
just a clone.
Yeah, it's just
a copy of Bitcoin.
copy of Bitcoin, a bit faster, a lot less value. It took about 10% of the value, I think. I've not even looked up what it's worth.
So if you buy Bitcoin now, do you automatically get Bitcoin Cash?
No.
No, you don't.
If you buy Bitcoin, you're buying Bitcoin. You buy Bitcoin Cash, you get Bitcoin. So it was only if you held Bitcoin when it got split. Yeah. Yep.
So we bought ours about a month ago, which was, and we didn't know about this split, and then a week later we found out about this split, and we had a look on the net, and there was people saying do this, do
Stuff
that.
going everywhere, yeah.
So we took our money out, put it in a paper wallet, and it's still there now.
Mm-hmm.
How do I actually get this Bitcoin Cash? Do I have to go to an exchange and cash my Bitcoin in there and it will suddenly pop up in a different listing? Or how do you know you've actually got it is my question.
Okay, so your paper wallet should hold the key. The providers of your paper wallet will have dictated whether or not they've interacted with Bitcoin Cash. And if they have, then when you get back, when you take your keys, load them into that provider, then you should be able to see Bitcoin Cash there.
Surely there must be some consolidation going on at some point in time for this, because it sounds very fragmented to me. And the other point was...
You're talking chart pattern consolidation?
No, in terms of consolidation of these different entities that hold these different wallets and availability of exchange.
Okay.
Because if you... Let's fast track for a couple of years ago.
Consolidation is a word that I wouldn't have chosen. Okay, so you're saying, right, 800 currencies, that's ridiculous, how can they all survive?
Correct. Not only that,
exactly
correct. And what you said before is that miners have to have a general consensus before something happens, but then you've got these rogue guys doing something else. Now
okay, you need to actually understand the cryptocurrency world a bit further. Okay, so created, and I'll use a bit of language here to graphically animate it for you. Okay, there's Bitcoin, that's the gold. There's Ethereum, that's the workhorse. Then you've got altcoins. They are coins which have a real world purpose. They're actually bloody out there doing something, making something better, finding a problem and fixing it. They've got a good development team, or dev team as they're called, and they shill it well. Shilling is selling. Okay, so they've got a good shilling team. They're selling it, right? They're the coins that'll do okay. So we call them altcoins. The rest of them are called shit coins, okay? There's probably about 750 of those and counting, okay? And that's not to say that all of those shit coins don't have a real world purpose. A lot of them do, but there are a lot of coins racing for the same purpose. Identity verification, right? You know, instead of getting your license and your this license and that license and your phone bill and sending it off as verification that you are who you say you are, a lot of companies now are racing to become a one-stop shop for identification, right? Your identity is secure, encrypted, and you never have to produce your license or any other details about yourself ever again. You just come up with, this is me. And they put it in there. And if your credentials match up, you could be Superman, and all of a sudden all the lights will start flashing and they know this guy's who he says he is, this guy's verified, he's okay, he's legit, let's deal with him, all right? And that's another, yeah, I won't even start. A lot of companies racing towards the same goals, okay? So that's why you're looking for ones that are being sold well, solving a real world purpose, and have a good development team, okay? A little bit of work. Yeah?
Can you just explain why consolidation is not the word and what the whole premise of decentralisation is?
Consolidation is not the word because this coin is not that coin and they can't join forces, okay? And if this coin outperforms this coin by 1,000,000 miles, goes stellar, this coin will die, okay? Eventually. It will be a glorious crash for a lot of coins, okay? This particular Wild West stage of the market is very much like the dot-com boom of the 90s. And,
That's good
okay. All right. Yep.
If you want to invest in the D-Health coin or token, do you buy directly into that, or do you have to buy Bitcoin to purchase the D-Health?
You can purchase through Australian dollars, Bitcoin or Ethereum.
Okay.
Yep, the three options, yeah. Hey guys, I know I've been talking for a long time and you guys must be pretty sick of my voice or getting thirsty, or you know there's food out there and you're starting to sniff it. If you want to leave the room, please feel free, but if you've got more questions, I'm happy to answer. So don't feel embarrassed to stand up and walk out on me. I'll still love you.